Thanks for joining us on Power Lunch. This is BloombergQuint. I'm Harsha Subramaniam.
Good afternoon. I'm Dugal. Let's get straight to the headlines. Indian markets slide on concerns that a strong dollar will spur outflows. The Indian rupee slides to an 11-week low.
The Nifty Pharma Index is the only sectoral index in the green as brokerage upgrades and recent US FDA approvals spur pharma stocks.
Cyrus Mistry can pursue charges of oppression and mismanagement against Tata Sons at the National Company Law Tribunal, says the Appellate Tribunal in a partial victory for Mistry.
Anil Agarwal has his eyes set on becoming the single largest shareholder of Anglo American, will spend another $2 billion to acquire an additional 9% stake in the British mining giant.
And we're kicking off Power Lunch today with a host of big voices on the show. We'll bring in AM Nayak, who spoke to Menka Doshi. What's the L&T strategy for the defense sector? Hear him out on the show today.
Anand Mahindra believes there's money to be made in India's nascent electric vehicle sector. That's coming up.
And Arundhati Bhattacharya says that investors should be willing to pay for the cost incurred by banks on financial inclusion.
All that coming up in a moment, but let's start with the markets and how they're faring at this point in time. Neeraj is standing by with all the equity market action. It's been a day of consolidation, Neeraj, and put this in perspective.
Yeah, so you could argue that it has been a day of consolidation, though I don't know what the last few days have been, if not consolidation, quite frankly. But today, a lot more volatile than what the last few days have been. We actually cracked quite a bit as well. And had it not been for what the pharma companies have done today, we would have been substantially lower in today's session. So one, that. Two, I think the volumes are much higher. Volatility, we've been talking about how it's been going off. Today, it's really shot up in trade, Harsha. So India VIX has gone up in trade today, and that's the other key thing. And the only space that is actually doing reasonably well for itself is pharma. So I think if the Nifty has gainers, it is all pharma. The top 3 or 4 or 5 names are all pharma names, and that's about the basket that is probably saving the markets today. It's not a deep drop. Maybe I was speaking to Andy Mukherjee a few minutes back, and maybe the bond markets are reacting a lot more than the equity markets today. But yeah, a bit of a pullback that we're seeing in the equity markets for sure.
Hold the thought for a moment. This rally may be peaking, says Kotak, and it's advising rich Indian clients to hedge their equity positions. Jaideep Hansraj, CEO of the Wealth Management Unit of Kotak Mahindra Bank, says, and I quote, that no one knows how long this liquidity party is going to continue, and a re-entry may be tough. And they're advising clients not to sell, but to hedge their investments in stocks. That's an interesting one. At the same time, there's another viewpoint as well, and this is, I'm throwing this at you, Neeraj. Investors should buy Indian stocks from a 3 to 5 year perspective, as economic output will get a boost from previously unreported trade flow after demonetization. That's according to Manish Tibrewal, who's managing a $500 million asset fund based out of Singapore. Two opposing points of view. One saying, this might be a good time to buy. The other saying, as the majority is tilting towards high valuations.
Yeah, so, well, we did a small piece as well this morning, Harsha, on valuations. Just a couple of things. August 11th was the date from where we started moving up. Since then, the Nifty's given about 4.5% returns. But look at what the broader markets have done. The small cap index, the BSE small cap index, 12% returns. And the market has ignored, I might add, news of this whole GDP downtick that we've seen, has ignored the North Korean tensions, which I think even the global markets have, and FI outflows. And we were just speaking to Milind Barve a few minutes back, and he said that we're talking about these 20,000 odd crores of money coming into via mutual funds. I mean, a lot of it is actually coming into the balanced fund route and otherwise. So it's not, a lot of it is not pure play equity money that is coming in. 100% diversified equity funds have not gotten so much money. So it's not that equity mutual funds have pumped in like multiple thousand crores. Yes, they have, but it's not 20,000.
It's also going to debt is his larger point.
So are we at expensive valuations? Yes. Nifty trailing PE is at the highest levels since Jan 2010. The mid-cap trailing PE is 40% higher than the highest level that it had. And this was, I think, some 12 years back. 40% above those levels. It's terribly expensive. Can it correct? We don't know that. The question to only ask is, and frankly, I think we'll only get to know when we get there. The question to ask is only this, that if we do correct, and if FIs pull in further money, and if we correct viciously, would the PMS money and the mutual fund money that is coming in droves, so to say, stop? And if that happens, what happens to markets? That's the key question, which I don't think anybody can answer right now, to be honest.
All right, Neeraj, thanks so much for that. Markets today, and markets are more medium term, but the big story from a corporate standpoint, Cyrus Mistry and his family can bring oppression and mismanagement charges against Tata Sons management. That's the ruling coming in from the National Company Law Appellate Tribunal this afternoon. What exactly transpired in the courtrooms and what the road ahead for Cyrus Mistry is going to be. We've got Arpan joining us from Delhi and Payaswini here in Mumbai. Arpan, let's start with you. Do you want to run us through the details of what transpired in the courts today?
That's right, Ida. So if we can go to the background of this case, what had happened was that Cyrus Mistry's firm initially had approached the NCLT in Mumbai, where they had alleged oppression and mismanagement and oppression of the minority shareholder. Those pleas were rejected by the NCLT on the ground that on the grounds of maintainability first. Now, Section 241 of the Companies Act basically says that if you're filing a petition of oppression and mismanagement, you need to have 1/10 of the issued share capital. The petitioners need to have for that plea to be accepted, and there were certain grounds on which this condition of 10% shareholding can be waived. The NCLT had rejected on both these grounds. However, the NCLAT, when the appeal was filed and the judgment came today, it upheld the decision of the NCLT as far as the maintainability was concerned. So what they said there was that Cyrus Mistry does not have the requisite, or the firms do not have the requisite shareholding requirements that is required by the Companies Act. However, the appellate tribunal in the second part of the judgment on the waiver said that yes, there do exist certain exceptional circumstances where this condition of 10% can be waived, and therefore his waiver plea was allowed. And now the case now heads back to the NCLT Mumbai, and also the NCLAT has said that the hearing there should be completed within 3 months.
Sure. Arpan, thank you for that. Payaswini, what does Cyrus Mistry need to do now to build his case of mismanagement and oppression?
Harsha, to answer that, we should probably take a step back and see what transpired at the NCLT, which is where now the battle will play out. At the NCLT stage, Cyrus Mistry had argued that, hey, tribunal, give me the waiver to argue oppression and mismanagement against Tata Sons. And while saying so, Cyrus Mistry had said, I want this opportunity to make this case because of oppressive articles of association of Tata Sons, bad business decisions such as acquisition of Chorus by Tata Steel and continuation of the nanocar project, his own removal, which he termed as illegal, as chairman of Tata Sons board, his forced removal as director from Tata Sons group companies, breach of insider trading regulations, leaks of board meeting decisions to outsiders, and abuse of position by Ratan Tata. So he laid out all these points to make his case that I should be given an opportunity, even though you, the tribunal, say I don't have the required threshold. He made all these points to make that case, to which the NCLT had said that no, you don't have enough cause of action, so we can't give you that opportunity to make this case of oppression and mismanagement. Now, Cyrus Mistry will have to build on these points and argue that why, in fact, all these points were oppressive and also are a sort of case of mismanagement by Tata Sons board.
All right, Payaswini, thanks so much for that. That's the big story, and you can go on to BloombergQuint.com to read a lot more analysis of that particular story. Moving on to mining billionaire Anil Agarwal. He's looking to increase his stake in Anglo-American PLC. The Vedanta chairman may buy about 9% stake in the British miner for $2 billion. Bloomberg's Ruth David joins us from London. Ruth, does this make Agarwal the single largest shareholder after this move? He has, of course, denied that he's looking to make any sort of a hostile offer, but he now owns 20%.
Absolutely. So he's come ahead of South Africa's PPC, which was the largest shareholder. And if you remember, he had bought a stake of about 12.4% in March, and he'd become the second largest shareholder there. And the thing to keep in mind is, under the UK Takeover Code, you need to say if you intend to make an offer for the rest of the company. So he said he does not intend to do that, but that only restricts him for 6 months. And even in those 6 months, if, say, Anglo were to decide that they want to talk to him about a takeover, they could approach him, but he can't approach them for a 6-month period. And then if he wants to, if his intentions change, something could be done about it.
Ruth, we'll leave it there. Thank you so much indeed for joining us. That's Ruth David joining us from Bloomberg News in London. A.M. Nayak has been at L&T for more than 50 years now and has made his way from being a junior engineer on the factory floor to the corner office of one of India's largest capital goods and engineering giants. And as he gets set to give up his executive position at L&T, Nayak sat down with Menaka Doshi to talk about the 3 thrust areas identified by him for the 1,70,000 crore market cap company. Here's a slice of that conversation.
While we have come out of many businesses, I said 5, we have created one major vertical. And we have appointed an executive director in charge of that about 4 or 5 months ago. That's a major organizational structural change.
What vertical are you referring to?
Mr. Patil is now made a executive director in charge, seeing what the defense prospects are all about. And we think that in the next 6 to 8 months, we have a chance from zero last year, because the defense has started this year, about 20 to 25,000 crore prospect, and maybe we may.
So in FY18, you expect 20 to 25,000 crore worth orders from the defense sector.
That's the potential, yes.
That's the potential for L&T, or that's the potential
for L&T.
That's the potential for L&T.
Right.
What percentage of orders, or what is the quantum of orders right now from defense, sir?
About 8,000 crores.
So you hope to be able to treble this at this point in time?
It's not a question of treble. One tender you win, that tender is of 25,000 crores.
Okay.
Either you will win or you will become zero.
We've seen a change of ministers in the defense ministry now. Are you happy with the way things have proceeded in defense?
No, during the time there was no defense minister, obviously things have not gone as fast as it should, or possibly not moved much. But now that there is a defense minister appointed, and possibly she's going to catch up with a lot of things which have stagnated. I think they will. 2 tenders recently opened, we were not trying for it. But at least 2 opened, right? Then 2 more, third one is opening within next 1 week. And then there are LPDs, which are the carrier for helicopters, 4 of them. Now, these are the 2 which we are focusing on. If we win one,
and
we are okay.
What's the average size of each of these in terms of the size
Both
of the
are
tender?
20,000 crore each.
Both are 20,000 crores each.
But second one, only half could be given to one company.
So they might break it up over 2 companies.
2 companies. But the first one is all for either you get it or you are zero.
And you'll know what, within a month's time or 2, whether you want these or not?
No, it doesn't happen that fast.
Take much longer than that.
2 or 3 months.
Other 2 quick questions is, I think, how's the hydrocarbon business been doing? Because that's been a sticky one for you over the last few years. Are you finally seeing much recovery there? And secondly was about your international markets. Your international orders have been dominated by the Middle East. We've seen, again, thanks to lower crude prices, that being a sticky spot. You said you were expanding to other markets, including in North Africa, etc. So what's the outlook on the international markets front and on the hydrocarbons front, if you could give us a meaningful
I think
update?
hydrocarbon, we have come out of all the problems as we had before,
So you're
where we
expecting
lost
growth
a lot
from
of
Europe?
money. And we think that there is a sea change now as we came out of all the old projects and we have got into new projects. Our target for 16,000 crore this year of order book, I think we have a possibility to meet that. We are L1 in 2 of the project in Middle East. We'll get both of them. They are worth about 3,500 crore. And we think, again, something which is estimate, from minus few hundred crore per year, we are going to come this year to plus few hundred crore. As far as the Middle East is concerned, obviously it is down. And while it is down, there are some very important infrastructure projects.
Like in Qatar, etc. that you're like the ones in Qatar, etc. that you're working on.
Well, one is Qatar. There is one major one in Abu Dhabi, which is $2 billion, 12,000 crores. We have bid with a local company. I'm told that we are well placed.
A.M. Naik there on L&T and some of its businesses. Now, for the last fortnight or so, the big debate in India has been what exactly is happening in the Indian economy and why is growth slumped to 5.7% in the first quarter of the current fiscal year. No 2 economists have the same theory. Some say it's demonetization, hence temporary. Others say it's entirely linked to the twin balance sheet problem and the private investment cycle, which refuses to pick up. We spoke to Jahangir Aziz of JP Morgan for his theory. Let's quickly hear him out and then we'll get into a debate on the various aspects of this economic slowdown.
Trajectory of growth has been that it's been on a downward trajectory almost for 4 or 5 quarters now. And I know that a lot of people want to attribute this to things like demonetization, GST, but one needs to step back and look at the fact that the trend has been going on for 4-5 quarters, way before either demonetization or GST was even in the horizon. So I think there's a deeper reason as to why India is slowing down, and I would suspect that it probably has to do with the fact that India grew on the back of globalization, on the back of global trade. Now, many will disagree that no, India is a closed economy. In reality, India may have been a closed economy some time back, but over the last 10-15 years, external demand has been the key driver of growth. And I think the decline in global trade that has been taking place in 2012 onwards finally hit India's manufacturing and services. And I think that is probably a bigger driver, the lack of demand, the lack of external demand, and the fact that, over the last 3-4 years, we have not replaced external demand with something domestic.
Catch that entire conversation on the state of the economy at 1 p.m. today.
Okay, let's take this conversation further. Andy Mukherjee from Bloomberg Gladfi joins us in our studios on our inaugural day. Andy, good to have you here. Well, let's talk economy. Thank you so much. You've seen what Jahangir has to say, and we're seeing this sort of this trend growth, decline. Exports are being blamed. What do you make of it, and this whole debate about the need for a stimulus?
Well, if I could debate Jahangir on this point, so my question to him will be that since he said that global trade has been going down since 2012, then why did it hit the Indian economy only now, and why not before? I mean, how come we are all talking about suddenly external demand today, and not talking about some of the other usual suspects that are paraded? For instance, demonetization, a very messy and complicated GST, and not to mention or not to forget the twin balance sheet problem in the economy. So then, talking about exports, is the rupee level a problem? Is that why the whole sort of our not being able to, because global trade is actually now looking better than it was last year. So I mean, are we becoming uncompetitive in global trade in some of the things that we do? And is that because of the rupee? Or is that because of the fact that some of the things that we are actually good at, for instance, leather or handicraft, etc., those supply chains actually bore the brunt of the demonetization exercise? Textile. Yeah. And so, is it that supply chain disruption that we are paying for, that the economy is paying for? So I guess yes. So I'm not saying Jahangir is wrong or that I don't agree with him, but I think this issue needs to be actually looked at, from that sort of a very micro perspective. I'm sure the full conversation with Jahangir probably has all of that.
Some of that, but not all the questions that you had. But Andy, tell me. So I mean, if you look at things as they stand right now, partially, perhaps you can blame on exports, even if not entirely. The other problem is private investment is going nowhere. Consumption came off a little bit, but there's no sort of, a sign of dramatic stress on consumption. So against this backdrop, if people are saying we need some sort of stimulus, what would it be? What can the government do?
Well, consumption, yes, it's not falling off a cliff, but is that because people are consuming their wealth? Because there is a lot of money being made in the stock markets, right? Which have I mean, nowadays what I hear about India is that, everybody can keep saying that it's an expensive market, but at the end of the day, if money is coming via an SIP, what is a fund manager to do? He has to just go and buy the stocks, right? Yeah. So is it the wealth being consumed? Is it that which is supporting consumption? Because where are the jobs? Do you really hear many good things on the job creation front? I think even Yes Bank let go of 10% of their workforce, right?
Yes. So, and banks and IT were the two big hirers in the market.
Exactly. IT, is IT hiring? I mean, I haven't heard of IT hiring. Maybe startups are hiring, but is that startup ecosystem now so large as to actually make up for all the job losses in the software exporting side?
Sure.
So yeah, so I would guess that some of the wealth is being consumed.
So you would then argue that some amount of stimulus, even if it hits the consumer, or it goes towards the consumer segment is worth it?
No, but there I would again side with Jahangir and say, and I will say that we probably don't have good choices, because look at what happened in the bond market today. A 10 basis point jump in the 10-year bond yield, just on mere speculation of a figure of 400 billion rupees, 40,000 crore,
Right.
of stimulus. So clearly, the bond market does not think that this is a great idea and that this can be supported. Now, it can be a knee-jerk reaction. Maybe if the finance minister were to actually explain the rationale of why he's doing what he's doing, then maybe the bond market's trust can be regained. But for now, it looks like, and if the bond yield is going to behave like that, then how is the RBI going to look at the whole picture? Because remember, a fiscal stimulus will only make sense if the RBI actually allows or accommodates it, as economists would say, right?
Yeah.
What if the RBI does not? What if suddenly RBI's MPC turns a little more hawkish? Currently, it's a little more dovish, but it turns more hawkish and says, "Oh my God, we are going to miss the 3.2% fiscal deficit target." All our arrangements about staying on hold, I don't know what.
Goes for a toss.
Yeah. So,
But let me just add one dimension. The whole premise is built on, that tax collections are going to be robust. That I might perhaps have that little bit of fiscal headroom. I might give the 3.2% a miss and go spend that money on the confidence that I'm going to make tax collections.
but Harsha, you've only, that 95,000 crores or whatever has come. We only hear that 65,000 crore of it has already been claimed by, as in input credit, right?
Correct.
So, do we have clarity on what kind of tax numbers we are going to end up with at the end of the year?
Absolutely not.
So, for us to now plan all of this, and remember, all of this is still picking up, change in front of a road roller called the Fed.
Yeah, I'm glad you mentioned that actually. And I'm on that note going to bring in Jayesh Mehta. Andy, stay with us because, I'd love to have you join into the conversation. Jayesh Mehta, of course, Treasurer at Bank of America Merrill Lynch. Jayesh, sir, thank you so much for coming in on our first day of Going Digital Live. Really happy to have you. Let me ask you, sir, what's happening on the rupee today? What's happening on the bond yields?
Congratulations.
Thank you, sir. Is the rupee responding to the Fed while bond yields are responding to some speculation of fiscal deficit targets being, sort of not adhered to?
Yeah, so I think a little bit in the opening when it did react to Fed and maybe that was like 4-5 basis point on the bond side, on the rupee again 35-40 paisa. I think the news suddenly of fiscal deficit giving a skip and again the number people are not sure because the same it's come basically on one Twitter handle and it's named some unknown government source saying 40,000 and maybe 50,000 is already shortfall. So is it 40? Is it 90? Market's really confused and so from that perspective, market have reacted to that, and I was hearing, a little bit of the previous one. That basically, yes, it's not a great idea to give a skip at this juncture, especially what's happening on the U.S. Fed side. Till I think yesterday, people were saying either there would be, more probability was more on balance sheet reduction. And people had given up that there won't be December hike, and now we are talking about both the things together. That's going to be a little bit of challenge. So I would still worry more on the Fed. Yes, I would say today's market reaction is more knee-jerk to the second half, was more a knee-jerk reaction to the media report citing 40,000 to 90,000 crores fiscal slip.
Okay, Jayesh. So from a slightly medium-term perspective, we've heard calls of the rupee level at about 60, 61. This morning somebody said 64 by 60. We'll stay at the 64 level by December. What's your sense from at least 3 to 6 month perspective, and a situation when export is slow? Where do you see the rupee levels, settling at?
No, so I think one of our export, I'm not a big proponent of rupee appreciation stalling the export. Like we have our specialized skilled export. Yes, your GST as well as a little bit of demo, but more of GST has blocked people's working capital, the flow. There is definitely disruption. It's maybe whatever one can say, teething trouble, starting trouble, whatever it is. We have to see at least one more quarter, maybe two more quarter, to figure it out what exactly people getting used to it in terms of the system and claiming the refunds and stuff like that. So that's where we are struggling. But yeah, right now at this juncture, we have two things. Actually, I would say only one real major thing is the Fed. The other part is, I would say, just I personally think government has not been leaking things, so why would this just get leaked, and that too only on one media? So I think I'm a little skeptical about today's afternoon news.
Jayesh, this is Andy Mukherjee from Bloomberg Gadfly. If I could ask you a question, sir. So my question is actually a question in two parts. One is that going forward, do you think the rupee will react more to the current account or more to the capital account? And also, what will foreign investors themselves, the people behind the capital account, what will they be reacting to? More to the Fed or more to the domestic Indian story and concerns of fiscal slippage, or of a major growth slowdown, etc. So that's my question.
So definitely, bearing today for a moment, let's forget for a moment, let's keep fiscal slippage aside, right? So while we were all talking about long-term rupee bullishness and stuff like that, it is with the view that, the Fed, yes, they may talk about it, but they will not really be able to go about both things together, which is either reduction of balance sheet and as well as rate hike. Now, that's one big risk we have to face, right? Like when a central banker says they will do balance sheet reduction in this non-disruptive way, I think non-disruptive way is a perception of every individual which is very different, right? So that's a little challenging. And if that's something of that sort happens, it's not only India, it's all emerging markets. So I would say all emerging market put together. So I think today afternoon news, I would not really give too much of weightage on fiscal slippage. It's 40,000 crores, some say 90,000 crores. Spending, it's not that easy. Stimulus spending, you can give, what do you call, doles to something like Narega and stuff like that. That's easy to spend. But on project spending, to create jobs, infrastructure spending, it's not that easy. I think I read somewhere last week, even on railways, like your budget is 60,000 crores. Year-to-date spend is just 10,000 crores. So spending on infra, putting it on paper and actual spending is two different things altogether. And we have to see how this GST stabilizes in terms of tax collection.
So,
like
Jayesh, if I could
first
do
year
a
was 65,000 crores refund, which...
Jayesh, if I could do a very quick follow-up, because you mentioned something very interesting, that for the government it's not easy to spend money quickly. But if you recall what the government did in 2008 and 9, actually 2009 budget, after following the 2008 global financial crisis, was the excise duty cut. Do you think something like that could be on the anvil here? Because an excise duty cut, people are anyway getting unhappy about fuel prices, etc. So how about an excise duty cut? Do you think it can be looked at, or that will even be considered by the government at this stage?
Yeah, but having made that statement, how will that really help you, fuel up and change up the economy in dramatic way? I think what we really require is consumer spend, and what we really require is also job creation, right? And both the things are not going to consumer spend. Maybe you can, you reduce the excise duty and all that, but I think that's robust. I don't think we need really much of that. I think what we really require is job creation. When the two brightest stars, as you were saying earlier, bank and IT, has not been hiring. In fact, they're firing. We have to figure it out how to get more jobs, and that will come through infra spend in big way. But it's not easy to do it immediately, right? So, and especially the expense on that is not going to be that easy.
Jayesh, we'll leave it there. Thank you so much for joining us.
Twitter news, I'm a little bit confused.
Sorry, Jayesh, we'll leave it there. Thank you so much indeed for joining us with your with your perspective. Good to have you on the show on our first broadcast. And Andy, thank you for joining us. It's been interesting. I hope to get you a little more on the show.
Congratulations.
Thank you so much,
Congratulations
Andy.
once again. I'm back with old friends.
Thanks.
There's money to be made in the nascent electric vehicle sector, says Anand Mahindra, who was at the Bloomberg Global Forum in New York. The Mahindra Group chairman believes that electric vehicles won't require government subsidies to take off in a big way. Listen to what he had to say.
Currently, we're the only player in electric vehicles in India. And we've just been believers for a while, haven't been making any money, but now the tipping point seems to be reached. But one of the experiments we are very, very sort of interested in and optimistic about is in a city in India called Nagpur, where we are supplying the cars. The drivers have signed on to a ride-sharing company there called Ola, and the government has provided the charging station initially for this to begin. And it's working well, and if it works extensively, then we're going to replicate it. So that's an example of a government stepping in, actively participating. So more than trust, you need a public-private partnership to work, and it can happen. The second plane at which you want government help, and I really don't believe in subsidies at all, because I think these businesses are all profitable, as I said earlier, is you need the leader of the country to give a direction. And let me give you an example here again. When Prime Minister Modi laid out his vision for solar power and wanted to make India a leader in solar power, stated a very clear goal of 175 gigawatts of renewable energy by 2022, 100 of which was solar. We invested. So businessmen look for stability, they look for direction. You don't need that much more if you're just smelling opportunity. So in 3 years, we built a company that is now the second largest builder of solar power plants. We're not looking for subsidies. We were just saying, tell us if that's the track you're going to follow. If you're going to do that, there's money to be made.
All right, stay tuned to catch more big voices from the Bloomberg Global Business Forum today. Bill Gates, Tim Cook, Arundhati Bhattacharya, all of them, you will be able to catch their comments live on BloombergQuint.
All right, that's a wrap on lunch. Thank you so much for watching.
Coming up, a conversation on what he makes of the state of the economy.